Seascape Energy, represented with CEO Nick Ingrassia. Seascape was formed close to 2.5, 3 years ago now, 23, and built a quite nice position now in Southeast Asia over the last 2 years, which is a hub which is it's not that known in the European capital market, so it's interesting to get some, I would say, perspectives from your end as well. And Nick, we've known you through several ventures over the years, close to 20 years from oil and gas industry, both on the operational and industry side, as well as being an ex-investment banker, focusing on the energy sector, which is always a quality stamp of approval. So the floor is yours.
Hey, thank you. Hello, everyone. Not easy after a couple of long days. Is that better? No, can you hear me better? Good, thank you. I'm going to start by re-thanking SB1M for having us. Second year in a row. It's good to see a lot of you here again. So I'll take you through Seascape, what we are, what we're up to, and hopefully answer a few of your questions. So Seascape Energy is a Malaysian E&P pure play. So we're only focused on Malaysia. Some of you may remember us from the distance of time as Longboat Energy when we were a Norwegian pure play. But now we are a Malaysian pure play E&P business. We have built a portfolio of 3 production sharing contracts over the past 3 years with very little capital and have built it into quite an interesting position in the country. We believe we are the only Malaysian E&P pure play listed anywhere. And if anyone can find another one, please let me know. So we have 3 PSCs, as you can see here. The first one is our flagship development, the Tamaris cluster, which we were awarded last year. We are 100% operator of this. This is our first operated development here in Malaysia. We've got a 250 BCF initial development and a huge amount of upside. These are really short cycle assets, so this is going to be developed very quickly with first gas in 28. We've got Block 2A as we head sort of eastwards in Malaysia. This was the asset that launched the whole thing. It is a giant gas prospect. We'll come on to that in a moment. We are fully carried through the drilling of that well, which will be happening in the first half of 27. Like I said, we have a full uncapped carry from a Japanese concern, and so really, really excited about that. That's a huge game changer along the lines of what Robert was talking about. And then we also have a non-operated interest in a series of gas discoveries, which are in shallow water Sarawak, going into the export market. So we ask a lot of the same questions about why we are where we are and what are we doing. And so the first one is, well, why Malaysia? Why are you a pure play here in Malaysia? And for us, it's 2 main things. It's one, that this is a growing economy, and it's structurally short gas. As you can see here on the left, this was a chart that was published by Petronas the other day when we were there for the launch of the new licensing round. Particularly in Peninsular Malaysia, you have a huge amount of demand growth. This is being driven really by 2 things. The first is that there is a huge amount of data centers being built in Malaysia. They're really trying to make Malaysia kind of the center of compute out in Southeast Asia, so that takes a huge amount of power. The second, which is kind of very interesting for us here in Europe, is that they are starting to retire their coal-fired power plants. So yes, they have coal-fired power plants. In fact, it produces half of the power in Southeast Asia. So it's very, very strange for us here in Europe where it's zero, or effectively zero. So this is still a place where coal is very much a factor. And so for us, developing indigenous gas resources, not only do you get the security of supply, not only do you get jobs, not only do you get tax revenue, but it's also carbon accretive. I think the other thing to point out, I was listening in a little bit on the North Sea session earlier, which is that oil and gas still remains absolutely fundamental to society there. And it's very similar to here in Norway, where you understand the role that hydrocarbons has to play. Renewables, all these things have, the whole energy space it does. But actually, oil and gas is super important there. It makes up 20% of the GDP. So it's something that they understand. People wear their shirts very proud. We've got lots of merch at Seascape. We wear it around KL, loud and proud. And you see that across the whole thing, which is a completely different from what we see here in Europe. The other great thing about Malaysia, of course, is that it's stunningly beautiful. So just a selection of some of the shots that I've taken in my time traveling there. If you haven't been, the quick sort of like tourism thing, please go and visit. It's absolutely amazing. Go all over. I've been sort of all over, both in Peninsular Malaysia and in Sarawak. It's super beautiful. So please, there's a little advert to go and visit Malaysia. So what have we done since we pivoted to Southeast Asia? So we've sort of developed this playbook, which has really become a sort of virtuous cycle of acquiring acreage, working that up to add resource, and then try and farm this stuff out. And we've done all of these things very successfully over the past couple of years. So starting with the Dewa PSC, so we actually brought EnQuest into this. They weren't even aware of it, so we brought them in, and they've operated that. We weren't yet ready to operate at that stage. We brought in a farm-in partner for Kertang. We brought in Inpex. They're obviously active here, Japan's largest E&P company. They did a great job sort of coming in and taking up what is a really important piece of acreage. We got the PSC award for Tamaris last year, drove the share price up. We've been adding resources, both contingent and prospective, which has continued to drive the share price up. And you can see that even with all of that growth, first of all, the business is still valued at less than $1 a contingent BOE, and the price targets are significantly higher, or at least I should say most of the price targets are significantly higher. Hopefully Theodore will take a look at that. So just diving into the assets a little bit, as Jarn said, I'm not a subsurface person, so I will not do this justice, but I love these slides, and you'll sort of see why. So Tamaris is actually it's a big PSC, it's about 1,200 square kilometers. These are two gas fields that were originally discovered by the Lundins about a decade ago. They were sitting in IPC. They decided not to develop those gas resources because we were in an oversupplied market back then. Now we're in a structurally undersupplied market. There's excellent data across the whole thing. Tamaris, it's Tembakau, which is going to be the main development to begin with, has 2 wells in it. It's got DST, it's got cores. So this thing is ready to develop. These are Miocene age, shallow, stacked sandstones. You can see it's a channelized system. You can see it basically originates in the west, and it goes out eastward towards the basin center. This is shallow water, so 70 meters. It's really near to export. It's about 70 kilometers away. So just to kind of give you an idea of this, because I know, in Europe we're kind of used to different things. So this is jack-up territory. We can drill a completed production well for $15 million. $15 million. So completely different thing here in shallow water, Southeast Asia. So this is ready to develop. We're going to be FIDing it towards the end of this year or beginning of next year, and we'll have it on stream in 2028. It will do about 100 million scuffs a day to begin with, and then with the additional exploration, the hope is that it can do significantly more. And indeed, we're sizing the development for that. So what is this exploration we're so excited about? So I love this slide. It's amazing. This is one of these big channels that comes down from the west into the east. It's at a level called I-80. And the reason why I love this one is because it's very hard to see. So there you see there's exploration and there's a discovery. And it's very hard to delineate the two. I'll help you do that. So this here is where we actually have the 2C resources around, but we obviously believe that this extends, up to the north and over a fault that divides pretty much all of the block. So we think there's a huge amount of resource potential. It's very low risk, very sizable, and what we're doing is we're sizing the facilities to make sure they can handle increased volumes. So I mean, this could easily be doing 200, maybe even 300 million scuffs a day. So almost a TCF there, a prospective resource. Risk is kind of 1 in 2 to perhaps even a little bit higher on a couple of these. And then I'll just kind of end a little bit on our giant Kertang. This is the one that was originally we picked up. It's a giant block. So this is a 12,000 square kilometer block. And this is a fantastic piece of seismic that's over it. The whole thing is blanketed with 3D. We are in northern Laconia here, so we're kind of almost, we're kind of pretty far outboard. This is a giant 200 square kilometer closure. Giant, giant, giant. We have certified prospective resources of 9 TCF here. It's actually at multiple levels, and we are benefiting from a full uncapped carry from Impex. This is about a $100 million well, $120 million well. We believe they will be testing it on success. It's at 3 different levels. So we have a shallow play, it's a turbidite play, which Total actually farmed into this same play just to the south of us. And then we have 2 pre-MMU plays. So these are, it's all clastics down here, we believe. It's giant, giant columns. This is kind of really, really big stuff. 9 Ts is what we've got. I would say that the operator is aligned with that, and our state partner believes it's much, much bigger. So this is a huge, huge field, and there's a lot of follow-on actually next door to it, but this is just the one that we highlight. And we've also picked the location, and so the good news is that the well will be going through all of these targets, so we'll be testing all of them. And we believe actually even the shallow stuff there, which is probably just shy of a T, is probably commercial in its own right as this infrastructure has begun to be built out in Sarawak. And then just to sort of bring this all together to sort of contextualize it as so, you know, what could this business be doing in a couple of years? So between our stake in Tamaris and Dewa, the operated one by Inquest, you know, we could be doing 10 to 20,000 BOE a day by 2028. This is all greenfield stuff. This is all shallow water. It's all relatively cheap. You're talking $1 barrel per BOE capex. You know, in terms of the economics, this stuff works at about $6, perhaps even less, an MMBTU. The economics are absolutely fantastic. So it's about a 50-50 state contractor split. So that effectively means that there's a 50% tax rate. So again, much different from what we're seeing here in Northwest Europe. And this would certainly put us on the map in terms of a significant amount of production. You can see some of these businesses have been here today. And so for us, this is a huge potential. So we've got the portfolio. We're becoming an operator now. We're moving forward into the sort of the development phase. These are really interesting, attractive developments, great returns on them, and we also have this exposure to huge potential upside. So that's it. That's Seascape. Check out our socials, smash the like button, all that sort of good stuff. We've been trying to engage with people in any way you can. It's very difficult these days, but do check out our socials. Actually, we've got some really good stuff and some real deep dives on some of our assets by actual geos rather than me.
Perfect. And Nick will also be handing out merch downstairs by the bar after
I've got stickers, I've got shirts, you know, they start charging for it is what we should do.
All right. A couple of questions to build on what you sort of said there. And I guess if you look back, you know, your career has been very much sort of M&A, business development focused, and now you sort of jumped straight into the assets. But if you take a step back, sort of, how did you get into these assets, and sort of how much time does the company now spend on looking for additional opportunities, or is it very much focused on maturing this, or do you still have a regional view on other stuff as well?
So I look, really good questions. You know, once a deal guy, always a deal guy. I'm always looking at stuff. We always want to look to grow the portfolio. My background has really been M&A. I've been involved with a number of E&P companies that have gone from kind of nothing, built themselves up and sold them, you know, primarily to peers. So I was involved with people like Valiant Petroleum, which was sold to Ithaca, Faro Petroleum, which was sold to DNO, Salamander Energy, which is where I had my experience in Southeast Asia. We sold to Ophir, which got sold to Medco. So we're always looking for opportunities. I would say that's been very, what we had was this first mover advantage. We were looking at Norway and we said, look, Norway is really, really difficult for a small business. You've got an oligopoly here where the government is really trying to direct assets into the hands of just a few very, very large producers. And so therefore we were really struggling to grow a portfolio. So we started looking to where else in the world could you do that with a small amount of capital. And so we landed on Malaysia. It's always been a place where we wanted to do business. I've tried to do private things there before myself. And so for us, this was an opportunity to get in early to a place that's become incredibly hot. I mean, I was in KL a couple weeks ago for the launch of their licensing round. So it's not just, here they launch a licensing round, it's an email. There it's a big kind of show and dance, people up on stage and whatever. And I bumped into, BP, Chevron, Conoco, a whole bunch of independents who were here at this conference. So all of a sudden this has become a super hot place. So I think that our sort of early mover advantage is kind of diminishing, but I still think there's a huge amount of opportunity. So we're always looking for ways to add acreage, transact, and ultimately, we will be looking for a partner for our Tamaris, our 100% block that we're operating, and so that's a way we see us sort of growing the business and transacting, but sort of in a way that is accretive to the value of the business.
I guess as a banker, I sort of notice the capex plans and the numbers and the size of some of these potential projects is sort of screaming capital requirements in the coming years. But we don't need to go into all of that detail now. But Southeast Asia is a very different market in many ways. Can you comment a bit on regional specific financing, or sort of is that different pools?
It's a really, really good question. Look, overall, like in the banking market, we've seen a marked change in the past 12 to 18 months. Before people just didn't want to know, they'd hang up on you. Whereas now we're actually receiving a huge amount of interest when we go and talk to people. My colleague Gabe and I were in Singapore a couple of weeks ago talking with banks there. And what you're seeing actually is not only the sort of the larger international banks looking at lending again and quite seriously into projects like this, especially since it's gas, it's coal replacement, it's greenfield. So this is going to be, Tamaris is going to be powered by renewables, so it's going to be solar and a bit of wind. So we're trying to make this as green as we possibly can. And I think that really resonates with the banks. And what we see is that there are a lot of local banks who see this growing industry. So typically, or historically, I should say, Malaysia didn't have an indigenous homegrown E&P space. So the idea was that if upstream in Malaysia is going to be done by anyone, it should be done by Petronas, the state company. And so actually what we're seeing is that that's probably going to start to evolve. We're starting to see more small players. And so I think the banks are then following that. They follow their clients. And so what I think we're going to see is banks starting to lend into this space, especially regional banks who are very keen to get involved in the whole space. So we're very, very bullish on our ability to finance these things. Obviously, we'll have a farm out. We're going to put in some leverage. And I think between that, I'm hoping that the equity piece would be very, very small, if even non-existent. Management owns 8% of the business. I'm incentivized to push out as few shares as possible. I'm trying to grow, like Robert, we're trying to grow value per share here. And it's important to us. And that's what we're all about. So this is not like a scheme to see how many shares we can issue and who the hell cares. That's not what we're doing here.
Yeah, very clear. All right, thank you so much.